welcome to WRPB and WRPB Studios. So, you guys know, because you've been with me a long time, that I have favorite topics. One of my most favorite topics is food, especially when they bring it in here so I can eat. But the other topic is the 40 years that I've been in and around real estate. And I always love to talk to people who are in around that industry because that industry is so cyclical and constantly changing. And I constantly learn something from the people I bring in. Sitting next to me is Josh Giddings. Did I get
Yes,
it right?
sir. You did.
With
Perfect.
Think Mortgage.
Think Mortgage. Yes, sir.
And the Giddings Group. Is that
The
right?
Giddings Group. Yep, that's me.
Okay, so I'm going to ask you this. How long you've been around the industry?
25 years.
Why?
Why?
Why would you-
I love it. They say you never work a day in your life if you do what you love. And I kind of fell into mortgages due to recommendations from friends. They said I would be great at it and ended up in it and never turned back. So regardless of where the market went, I've always been in it.
So, because I was in real estate, that's where I made my money. Being in those kind of positions like you're in and I'm in, I don't know if it ever happened to you, but you have someone, a family member or a good friend, who says, my washing machine is being delivered today. Could you be at my house? Because they think that we don't have a job.
Right.
Okay?
Yeah.
Because we can do what we want.
Yep.
And they also think we make gazillion dollars. They don't
Wish that was the case.
They don't realize we make about 17 cents an hour, especially when you own your own company.
Yes.
So you fell into it because, and what did you do before that?
Well, before that, I was in hospitality, so I used to run, manage restaurants, bartend. So at the time, I was bartending my way back through college because I got tired of working, nights and weekends, holidays, and hospitality. I knew eventually when I wanted to settle down, have a family, that's not really conducive to a family environment, unfortunately. So a lot of my regulars would come in the bar, and they had good money. I mean, not a gazillion dollars, but they would always tip me well, and they were mortgage professionals or real estate professionals, and they would constantly say, Josh, when you're done college, man, you got to come do mortgages with us. Come do mortgages with us. You'd be great. I was like, nah, I'm good. I'm gonna get my degree. I'm gonna get a job on my own. So I got a job on my own selling color copiers. That was the worst job ever. I've never seen such crooked people in my life. Like literally their sales training was how to bait and switch people.
Is it like used car salesman and then copier salesman?
Yeah, right there. I mean, they have a special place in hell, unfortunately, because it literally it wasn't sales training. It was how to con people. And I literally said, my mama raised me better. I'm out. And packed my desk up, called my buddy John and said, hey, you still got that mortgage job? And he said, come on over, and never looked back. Been in mortgages ever since.
So, since I've been around real estate for 40 years, I remember in '86, when I got into it in '84, I think, 85, and I started in residential.
Okay. Awesome.
And I wanted to stick a pencil in my eye every day. I hated it.
That was a tough time, yeah.
Interest rates were 18 and 18.5%.
You hear that, folks? 18%.
Okay. It was a nightmare. And I couldn't deal with it. But I stuck it out, and I ran into a guy, because I think God has a plan. I ran into a guy whose dad owned a commercial agency. He said, come here. And I was young, so I went. There wasn't one day that his dad, who was 6'3", 350 pounds, called me in the office and yelled at me. What are you doing? And I didn't understand, but I did my own thing. And then he bought a Rolls Royce. And he sent me and the vice president to go pick up the car. So I drove the Rolls Royce back, and I parked in the parking spot. And I looked down all the way to the parking spot, and there was my car, my little Honda. I said, maybe I should listen. And I did good. Commercial real estate wasn't really affected by those interest rates.
Correct. Yep.
And I made great money. So you now call your friend and say, you still have that job? And you go. Did he mentor you through it?
Well, they had a training program because I worked for a very big box lender at the time. So they actually had like a boot camp, like a training that you went through. They taught you all the guidelines and everything. But as you know, being in real estate, what you got to do for your license and stuff like that, and your license, and then you get out there in the real world, it's like a fish out of water. You're like, oh my God, I don't know nothing. So I was a train wreck. I mean, I admit it. I was horrible. I was on the phone. And it really was because I was literally trying too hard, and I stopped being me, right?
Right.
And I was trying to sell mortgages, right? Because that's what they taught you. You have to sell. And I changed my approach because it's obviously I like to talk. I learned with mortgages to shut up, right? And let my clients talk and tell me what they're looking for, right? What are their needs, wants, desires, right? And then from there, I listen, right? I don't hear and then wait for my chance to talk. I actually listen and I bank that info. And then based upon what they tell me, so then I'll repeat it back to them. Okay, Wayne, this is what you're telling me. You want to be here. You need extra bedroom because you got a child on the way. You're looking for a good school district. And here's where you're at. Here's the programs that you qualify for. And I would make a match financially with where they were at and then re-review how we hit all those goals. So I made it about them and not about me. And then I didn't have to sell anything. There's no sales involved. I'm just being a conduit, helping
Right.
people get what they want. So that was a big aha moment for me where, you watch movies like Boiler Room and all that stuff and the rush and the thrill of a sale. There really is no sale because whoever's been sold, right? Like car salesman, right? Copier, you feel dirty. You're
Well-
like, man, I just got took.
Go back. You were in this a long time.
Yeah, 25 years.
Go back to when mortgages were ARMs,
Oh, yeah.
okay? And you got someone in because you can get them in better than you could in a regular mortgage. And those people kind of got shafted a bit.
Correct. Yeah. I mean, ARM's a great tool. Look, if you're going to be in a house for a short period of time or you got low credit, we get you in and then we improve your credit and refinance you out of it. It's a great product when you have a plan. But if you get into an ARM with no plan and you were sold into one, yeah, that was a big problem. I was a big
Right.
contributor to the implosion.
I don't think people understand that if you're buying a house, say a home for yourself, and you buy it and the interest rates are 6%, and you're paying $1,500 a month, I'm just picking these numbers,
Then hour.
and all of a sudden the market kind of takes a tump. Now your house that you paid $150 for is worth $125. And you're still paying the $1,500 a month or whatever. It's your house, you live there. If you wait another year, 2, 3, 4 years, it's going to be worth $170. It's very cyclical.
Yes.
As I think interest rates, right?
Absolutely. Yeah.
So even if you want to get a house and you get it in a high rate, refinancing is always an option.
Correct. It's that old adage saying, right? What goes up must come down and vice versa. It is cyclical. So sometimes it's a little bit of a roller coaster ride. Some are a little scarier than others. But at the end of the day, you're confident in that ride,
What kind of finance do you do? I know you do residential.
I do residential and commercial. Yep. So best of both worlds, because especially in what we consider right now a higher interest rate market, right, compared to rates being in the 2s and 3s, which is no longer, right. Commercial investors, they don't care about rate. They really don't, because I always say it's never the price, it's the terms. And in commercial, like a building like this, if it cash flows with your tenants, it doesn't matter what the rate is if you're making money.
Right.
But people get to focus on rate because that's all they know, because they haven't been educated financially. So in order to sound fiscally smart, first thing they say is, what's your rate? Or even better, they're like, what's your APR? And I'm like, APR means nothing on a mortgage because it doesn't calculate your note rate. It's just the system of checks and balances make sure you're not getting clubbed in fees.
So someone wants to go and get a mortgage. What makes, besides personality, what makes one company different from another? What can one company do that another can't?
That's actually a great question, because we all pretty much play in the same sandbox, right? Most money comes from Fannie Mae and Freddie Mac, which are GSEs, government-sponsored entities, which means the government helps provide the pool of money that they lend to us as consumers in order to get a home. And that's one of the reasons why our interest rates are cheap here in America, because of those GSEs, right? So they have their certain guidelines that, you need 30 days worth of pay stub, 2 years tax returns and W-2s. We all have to follow those guidelines. But there's also companies that hold those mortgages, right? And they service them where you make your payment every month too. It's profitable for people to service mortgages. So if they have your mortgage on their books, maybe they might want to make sure it's maybe a little bit better of a mortgage. So they might have what's called an overlay, an additional guideline above what is mandatory that they say, well, even though FHA technically has no credit score, we want a 580 or higher or a 620 or higher. And unfortunately, some places are allowed to do that and do that. So the benefit of me being a broker and a banker, I have the best of both worlds. So if your profile is maybe on the edge, or maybe your deal's got a little bit of hair on it, maybe, minimum down, not the best credit, we can place you with an investor that has that appetite for that loan and prices it accordingly, and we can get a little bit more aggressive on that pricing. So that way I can ensure my clients get the best possible rates and terms.
I don't
to qualify
know
for
that
it.
people understand that TransUnion, Equifax, those places are private companies.
Yes.
And Mary, who pays to be a part of that, can do whatever she wants to do, and you have to deal with the consequences. So you have to be very careful. Now, for me, I heard that when I'm going for a mortgage, if I have, let's just say, not judgments, let's just say I have credit issues and they're medical, are they not counted anymore?
Not counted anymore. They actually don't show up on a credit report anymore. So
Really?
if you had some credit hiccups or had a sickness in the past, and I run your credit, there was a law signed in a couple of years back that it no longer reports. And I think that's fair, because so many times in the past I've seen people with credit reports and it's all medical collections, like a $50 copay that somehow slipped through the cracks at the doctor's office, now got sold to collections, and brought somebody's credit score from a 720 down to a 620, and it's
All right.
affecting their ability. So I think it was a good move.
So as a pauper that I am, and I come to you, what should I bring when I want a mortgage?
Oh yeah, real easy. So mortgage, you need three things to come together: income, assets, and credit. So the main thing is obviously you want to have some money saved up towards a home. You got to have income for your ability to repay the mortgage, and then your credit, which is your past performance. If you have the ability to pay your vehicles, your student loans, your credit cards on time, then that's a good predecessor that you can pay a mortgage on time. But if you're not paying your credit cards on time, if you can't pay a $100 credit card bill, how are you going to pay a $1,500 mortgage payment, right?
And it's interesting that you say that, because I have probably, I don't know, 9 or 11 credit cards. And I've made all those payments for years on time. So I have no late payments, nothing like that.
Solid.
And yet I see my credit score stay exactly here. And the reason becomes because I use those cards, so my usage is high. And I was told by somebody I know, and this kind of falls in line, is my ex married a race car driver. He had a lot of money. I had no money when I started. And he said to me, Wayne, we're the same. He says, you make $40,000 a year and you spend 50. I make $250,000 a year and I spend 300. As long as you can pay and manage that debt, you're okay. But I think for most people who are looking to purchase a home, you can't utilize that in your credit card. You have to kind of bring that credit card total down to like 30%, I heard.
Well, in order for it not really to impact your credit score, yes, the general rule of thumb is never charge more than a third of your limit. So if you have a $3,000 limit on your credit card, you never want to charge more than $1,000, because even though you have the capacity to pay that bill, the credit bureaus, it's everybody's information, gajillions of transactions, right? They don't know that Wayne's a good credit risk, right? All they're going to see is, oh, you got a $3,000 credit card and you took it up to $2,800, right?
And they don't see that I had the card for
forever,
4 years,
paying
and
it off
it's
every month, right?
Or
even
I didn't
if
pay it off.
you're making
But
systematic
I made my
payments,
payment. I learned only 20-something years ago how to deal. So everything that I have is on auto pay.
Yep.
At minimum, because I might forget.
Yeah, you don't want to forget.
Right. So I go and I make those payments, and if I forget, and I have forgotten, at least the minimum got paid.
Yep.
Okay, so I've never been late. I think, how does this affect? For me, I'm seeing a lot of fraud,
Oh yeah. Fraud every day, unfortunately.
and I'm going through it now again.
Ugh.
Okay, and I'm always amazed at how it happens, but I'm more amazed at what you got to go to fix it. Okay, I mean it's a nightmare. Like I have I don't know if it's 2 or 3 pending charges on my debit card, and they're pending, so I can't even dispute them yet.
Right.
You have to wait till they go through.
You have to wait for them to go through.
And then they go
things.
into a dispute, and then you got to fill out paperwork.
Mhm.
I mean, it's like a nightmare. And I don't listen to my wife sometimes. She says, Wayne, when you go to the gas station, use your credit card.
She is correct. I hate to tell you that. She's
No, I know
correct on that one.
She's always correct. You're married.
Yep, my wife's always right.
Okay? So they're always correct. You know, I have a Sam's credit card. And I got the Sam's credit card because I have, I guess, that premium program, whatever. But it gives you extra discount on your gas, money back,
Yep.
plus the money back you get. So I pay, I think, $100 and, I don't know, $20 or $30 a year for that card. Last year, I got back in credits $240. And you get to go in between, I think it's 8 and 10, if you're that kind of member.
Mhm.
And that's a pleasure for me because it's not as crowded. And no matter how much money you have, you're always looking for a bargain. And so Sam's, my wife and I call it free meat. I don't know if you go to Sam's.
I do not, but this is all sounding good to
Okay.
me so far.
So in the morning, the meat from yesterday is reduced.
Ah.
And it's snapped up almost immediately.
Immediate.
But between 8 and 10, there's not that many people there. So we stock up our freezers. Now I
Smart.
learned, living in Florida, not to do that anymore because I lost
In case you
probably
lose power, right?
$2,000
For the meat.
because of the hurricane.
Ugh.
Okay? So one of the things we have to deal with here,
Yes.
and I'm on the east side of US 1, and if you're on the east side, you have to evacuate.
Yes.
So I come here, and I stay here. I have an air mattress here, and I stay here for that night or two, whatever. I'm safe, I feel. And I'm with all my toys to make sure they're okay.
Yeah.
To make sure they're
Your
okay.
baby, yeah.
So who for you, who's your best referral source? And I know realtors are probably one of your best.
Yeah, realtors obviously because they sell real estate, right? So you know you fish in a stock lake. So I have pretty much a rule of 3 for sourcing business, and this will pretty much hold true for anybody that's an entrepreneur out there. You know, one is your past client base, right? You did business with a client, they love you. Why wouldn't you continue to follow up with them? So
Correct.
all my clients know every year they get a birthday card from me because I'm a big birthday person.
Okay.
And like, I'm going to get your birthday, you're going to get a birthday card from me because if you weren't born, we wouldn't have been able to connect and become friends,
I've been
right?
on my deathbed 3 times.
Right. And so birthdays need to be celebrated, right? They're very important. So,
I heal very well.
Yep.
God's not ready for me yet. I haven't annoyed enough people, but I'm working on it. But I've lost 40% of my lung function, had triple bypass, and I had 2 strokes.
And ain't stopping you.
And I'm still here.
Yep.
And, you know, I think that you're right. Those referral people that you've done business with, there's no reason not to stay in touch with them.
Right.
All right, so that's one. Who's your second?
Then the second one is, as well, is obviously realtors for me because realtors sell real estate. And another thing is fear. People who you know, right? People will know. You will talk to your friends and say, hey, I'm buying a house. I'm having difficulty getting financing. Or, oh, I spoke with a mortgage company and they turned me down. Or I'm having difficulty working with my bank. And they could say, well, yo, call my guy Josh G, you know,
Right.
Get a second opinion. And you should get a second opinion anyway, right? Just like when you had your major surgeries, I'm sure you got second opinions. Do we need to do this, right?
I had a heart attack. There was no second
Oh, there was
opinion.
no second opinion. So it was like,
I had
Wayne, we're taking
strokes.
it.
You're
Right.
going in.
Right, you're
Okay.
going in. Right. But like, let's say more so maybe like an elective surgery, something like that, where you have some runway, you're going to get a second opinion. So just my spheres, people, recommend me. So that's really about it, is you go to where the business is being done, which is real estate, right? Then you have your past clients, which everybody ignores. Nobody follows up with their past clients in general.
So, yeah.
One of the biggest problems in business today, that you alienate your current client base. And then the next is just your sphere, who you are. So that's why my Instagram is Who is Josh G. I want everybody to get to know who I am. So even if we don't transact, that's okay. As long as you know who I am and do a great job. I've won deals that way because the listing agent goes, hey, I know Josh. I don't work with him directly, but every time he brings me a buyer, he closes, and he's great to work with, and we win deals. So that's the thing is if you do right, you got to get your name out there. So your sphere, then those are my holy trinity of prospecting.
The sad part of sales is the sales philosophy is you're only as good as your last sale.
Yes.
But that's not 100% true, because your last sale could be your 2-year or 5-year down the road sale again, or your recommendation sale again. So commission-wise, you're only as good as your last sale at that moment. But you really have to think more
Beyond that, past
Yes.
that, 100%.
We're getting to the top of our time. How do people find you? You have a phone number?
Yeah, so my cell phone, it's my personal and my business, because I want you to be able to call me and speak to me. This is about your family, so I make sure I bring mine to yours and help you get into a home. So my cell phone, 856-287-2532. Call, text. I'm also big on social media at Who is Josh G, Facebook, Instagram, YouTube. Carrier pigeon, however you need to get in touch with me. I'm gonna answer the phone and get you taken care of.
Everybody, I say this a million times, use a professional. If you don't use a professional, it's going to cost you 5 times more in money and 10 times more in frustration. Josh, thanks so much for coming on.
Thanks for having me on the show. It was a pleasure.
Everybody check them out, and we'll be right back.